Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Tuesday, the 10th of May. All right, now more of the same. Now, as we come up towards that Wednesday US CPI numbers, the news services are sort of running out of basic, new content, right? So you're going to find if you're looking at this over the next couple of days until after the US CPI numbers, at least you'll get a bit of a rehash here all the time. Stocks, commodities slide as growth worries unnerve investors. It's pretty much the same story that's been going on. This is what I find a little bit funny. Whispers of S&P 500 bear market grow louder as US stock decline continues. I mean, I've been saying it for a while. This is going down at least another 25%. So I don't see why it's any surprise there. I guess they have a lot of readers that don't really look at the markets too much. And once again, they're sort of just more telling us what's been going on. You know, oil tumbles, the virus hits China, commodity currencies hit by tumbling oil, Bitcoin falls. Okay, it's just more like stating the obvious. So don't get too caught up in the a lot of this news, because it is just what it is. It's old news, actually. So just coming back to where we are, start of the week. I'll tell you what, the equity markets are very, shocked. Like they're not sure what's going on, where the next big move is. Interest rates are going up in the US. So these things have to come off. To start the week, another basically almost a 4% drop across the board, right? That's going to really get things moving. I tell you what, when you get 3 or 4 days of consecutive 3 or 4% moves down, everything just goes mental, right? It's the one thing you'd be keeping an eye on is the Volatility Index. That should be heading up higher, and it is at the moment. That will be heading up towards 40, really extreme levels if this happens ahead of this. So it's almost like the market is preempting strong US CPI numbers and getting ahead of the curve, especially on equities, right? And you're going to start seeing stops triggered across the board. And I'll show you the equity charts in a second. It's a bit of a bloodbath, but understand what you're trading and when you're trading it, right? At the moment, right, the US equity futures bouncing back during the Asian session. That's a risk on profile, and that's exactly what we're seeing here on the currencies. The dollar yen, the odd one out. So euro, sterling, Aussie, Kiwi slightly bouncing, and the dollar falling. Now, this is the cycle that you should see over the course of the week. As I said, up until the US CPI numbers, you'll see the US market go one way, the Asia market and early Europe counteract that, and then it comes back where the pressure is on during that North American session. It's nothing unusual. Once again, though, so if you're looking at, as I said, I keep bringing this up because I know the cryptos have been around a while, but they are sort of really developing structure and characteristics. We've got a risk on profile here, euro, sterling, Aussie, Kiwi rallying, and no surprise, the cryptos rallying as well, right? I'm starting to see a very clear correlation between a positive correlation between the North American equity markets and the cryptos. So we'll see how that continues to play out, but it's quite interesting. Commodities, bit of a mixed bag. You got some of these copper, gold, silver all going up, and crude going down, right? That's one way of it. And, there's bits and pieces here. The oil trade, it's a bit of a sea of red. You've got to be able to pick the eyes out of that. Now, so we're looking at the global markets. Let's just come back and have a look at on the charts, give you a bit more of a visual idea of what is going on. Just on the global markets, dollar index sideways. I'd expect that to continue into the US CPI numbers, as with the euro. I mean, these two things here should be very similar. Gold drifting lower, a bit of a relief rally at the moment. Now, finally, we're starting to see oil fall, right? It's dropped from 110 down to 102. Is this the end of it? I don't know. It's hard to tell with all the Russian-Ukraine situations going on. The EU talking about potentially, dropping Russians' oil off, etc., all that sort of stuff. Now, this is the more interesting aspects. I'll come in through the whole equity markets, but these equity markets are taking a beating, and the cryptos, Bitcoin, the main one following with it, and the commodities continue lower as well. Now, this is associated with global growth. Obviously the China lockdowns being the biggest manufacturer of pretty much everything. So we've got so much interesting stuff happening, right? And it's going to get better because we've got all the central banks coming online. They're all crapping themselves with massive inflation globally. So just going through the currencies, obviously the dollar index, it's up, but just sideways at the moment. The dollar pairs all moving higher. Now, I was saying yesterday, dollar CAD probably has to come back down if oil continued up around 110. But with oil falling now, it supports a higher dollar CAD, right? We're starting to see the CAD fall the same way as the Aussie and Kiwi, right? The commodity currencies. Obviously, dollar CAD is quoted differently to the Aussie and Kiwi. So that's why they are moving in opposite directions, but that's the key to it. The euro, bit of sideways action here as we come up towards the CPI, and sterling. Well, it looks like it's found a bit of a home around 123 as well. Right, now let's have equities. Okay, so let me just show you this page. I just love the sea of red. When you see red all over your charts, I mean, or over your data, you love it, right? Because that's where the fear is, right? And you can start to really focus on these instruments to try and work out where they're massively overshot or if they've got more room to move. And that's the key to it. So when you come back and have a look at the equity charts here, there's some interesting things, right? I still think there's a huge amount of room on the downside. These things are sort of generally going down across the board. Here's the volatility index up here. I expect that to keep going up. You've got some levels here. Well, you see Australian Ord's already broken down through a massive level. FTSE's got a long way to go. The stocks, well, it's teetering around a key technical level there as well. The DAX has got a bit of a way to go, but the S&P and the NASDAQ have already sort of broken down. Tells me technically they are heading south, right? The now the cryptos, well, if you're looking at the hourly charts, yeah, see, I mean, Bitcoin, Litecoin, and Ethereum all trading pretty much pip for pip. I mean, the movements, you'd think that was the exact same chart, right? But it's not. But what is a little bit different here is the longer term picture for these three cryptos. Bitcoin's coming up to a massive key level, psychological level around 30,000 as well. You've got Litecoin, which has already broken down through a longer term technical level. And Ethereum looks like it's heading, well, it's already broken through one level, teetering on the next. So I'd say if Bitcoin goes, they're all going to head south. And once again, that creates really good trading opportunities across the board, across the cryptos, right? It's got to be something on your radar coming up. Now, coming back to commodities, I'll get the charts up. Okay, so the key commodities here, as you can see, gold, silver, copper, I mean, they're all getting hit. Iron ore turning. Now, this is a big component of the whole basket, or a major component. And once that turned, the whole commodities index sort of started to crap out. You can see the Brent crude and light crude there, all falling, right? And you've got to expect that to continue as long as the Chinese lockdowns continue. Now, obviously, if there's a change and they say, look, everything's open, well, you're going to see a bit of a bounce in the commodities, but I can't see that happening, especially with their zero interest rate policy going forward. All right, so that's where we are, guys. It's a interesting setup at the moment. Lots of activity, lots of volatility. Don't forget, the volatility is good because we can see why and where it's coming from, right? So don't sort of shy away from that. Keep an eye on some of these data. There's the ZEW numbers, a good historical number for judging the overall sentiment and conditions in Germany, which is the main player for Europe. And once again, we are going to have got a data wait for the US CPI numbers, and that's where everything should unfold, right? Really strong inflation numbers, equities, massive sea of red. If we get weaker numbers, it'll be a massive relief for the equity markets. And once again, equity indices or individual stocks, plenty of opportunities to trade various pairs. At the moment, looking for the risk on profile just at the moment, and that is in play on the currencies as well. Commodities, well, a bit of a mixed bag. I mean, the short term on the daily outcome, they're slightly up, but overall, they on the month they're getting whacked, right? Which just once again gives us lots of opportunities. So, if anything, what do I think you should be doing? Well, get your analysis up. Try and isolate the best pairs that have either moved too far or not enough, or have got potential for the next move, try and factor in and what we used to sort of call hypothesis theory, or looking at what happens if the US CPI number comes out really strong, which pairs is that going to impact? Try and find the best technical setup on that side. And if there's really weak numbers, what should you be trading there as well? Right? Generally, we know, because if interest rates go up, equities go down. If equities go down, bit of a risk-off profile. Euro, sterling, Aussie, Kiwi go down. Dollar rallies. And then you've got the other aspect of the market, the commodities, right? Very closely attached to the Chinese lockdowns and obviously the Russian-Ukraine war situation. And then you got all the central banks coming online as well. So loads to think about. There's no need to rush in at the moment with throwing large amounts of capital around. There's going to be so many trading opportunities that you just need to control that, right? Usually the more trades you're doing, the lower the trade size. The fewer the trades you're doing, increase your trade size. That's the way the capital management sort of system works. All right, guys, have a good one. All the best. Cheerio.